Hello traders, it's Gregor here. I want to update you on some of the markets today. We will cover Euro dollar, Aussie dollar, dollar CAD, pound yen, mini S&P 500 and Bitcoin. So on Euro dollar, we are looking at a flat correction. It's a 3-3-5 pattern. So now we are actually tracking a 5-wave movement into wave C of four. It's still not 5 waves up, which means that we will expect more upside after any pullback. Now this pullback of a wave 4 is still coming in play. I'm not sure if already this week, but what is really interesting and important is that we are here at the gap from 2015. Okay, so on January 4th or 5th, we have seen a gap lower here. So actually, as you know, when those gaps will be filled, normally you will see a reversal. So if I zoom this in, you can actually see here a gap after Christmas and New Year's holiday. So back then market continued strongly to the downside, and now it looks like after a few years we are back at this level. So I would not be surprised if market will turn into a correction from here. What is really important is that after any 5 waves, correction will obviously occur, and I think that we could be in the final stages here of an extended blue wave 5. Why? Because we can count 5 waves up. So here is waves 1, 2, wave 3, 4, and it looks like that we are now in a wave 4. Wave 5 of 3. So I'm looking at a 161.8% extension to be tested, and the reason why I'm looking up there is because for now we still do not see 5 waves from end of a wave 4, so expecting more upside in the near future. But what is really important is that we are seeing a very strong divergence here compared to RSI and price. So if you look at the price, you can see higher highs, but the RSI actually has lower high. So it means that this could form divergence. Normally it occurs between wave 3 and wave 5 highs, which can be final part of this black wave 3, as I said. So I'm expecting a correction, let's say a turn to the downside on euro dollar later this week. So for now, still I'm staying bullish on the intraday basis, expecting more upside after this minor wave 4 here. If we will get below, let's say 1.1760 or 70, then obviously I would be looking for a new deeper correction to be underway. Okay, now let's take a look on Aussie dollar. Last time that we covered in the video analysis, I said that we are observing a corrective wave 4, and we said that this should be a counter-trend movement. Why? Because it had a lot of overlaps, and finally price managed to break out of this downward channel, which means, and normally that's very important evidence that correction is finished. We have seen a retracement for 50% compared to wave 3, not 38.2, which would happen in most of the cases. And I'm not actually surprised to see 50, because this was a complex correction, so it was a longer in time and in price, and that's why we focus on 50% here. So since market broke higher above this upper trend line with an impulsive price action, I suspect that we will see higher prices. Ideally, we will see wave 5 breaking above this level later this week. So I'm looking for more gains as long as we are above this near-term invalidation level, but a real important price is still this end of a wave 4, okay, because you never know, this market could also stay sideways within a triangle, okay, but in either case I'm expecting more upside as long as we are above these levels. So this wave 4 actually fits into wave C. If I label this wave C, so I'm looking for waves 1, 2, 3, 4, and expecting wave 5 to complete wave C at higher levels, ideally at 8160. So if we look back, what is 8160? It's actually a swing high of a wave 4 here back from 2015. So normally, as you know, fourth waves are very important swing levels, normally are retested on a pullbacks, and then they will cause a new reversal. So this is what I'm expecting here. A 3-wave rally that could complete wave 4 at these levels, maybe a spike to 82 levels, and then a reversal lower. But for the short term, we need to stay bullish because, as said, this was a counter-trend movement and this is impulsive bullish breakout. So ideally, we will see a continuation higher because whole pullback should be fully retraced. Now let's take a look also on, as I said, dollar cat. Dollar cat is in similar phase here. We are trading lower here for wave 5. Now wave 5 has a targets of 138.2% to 161.8% extension of this wave 4. So this is normally my minimum fib objection when I'm identifying end of wave 4. But in such cases, you definitely, I suggest to use more fib levels, look at higher time frames, and check if you have any fib levels in that zone on other time frames as well, because in such case you would be even more confident why one of support regions or resistance regions should matter. So I'm looking here for a red wave 5 to continue slightly lower, definitely expecting a break of these lows, and then later this week maybe watch out for signs of a correction. Ideally, this correction will then be this blue wave 4, because this blue wave 3 that we are currently tracking can be running into final stages. So I'm looking actually for this blue wave 3 also to test this 161.8% extension of wave 1. So what I did is actually I took distance of wave 1 and then projected from end of wave 2, and 261.8% extension comes in around 1.240. So if we go back to 4-hour chart, this is slightly above this 4-hour fib levels. Okay, so once we hit the new lows, the set, be aware of a bounce. We also shared a 4-hour swing trade on this one, so make sure to keep an eye on this here on our Elliott wave counts page. So as you know, these are published here in this box. Okay, so we are still staying bearish here on dollar cat and expecting more weakness in the near term. And as I said, then later this week watch out for signs of a reversal, because we will track wave 4 bounce, and ideally this bounce will then be just a part of this ongoing either wave C or a third wave of decline. We don't know which wave it is, but what really matters is that there is room for prices to decline back to these wave 4 levels. Okay, it depends how also crude oil will move in the future. Now let's take a look on pound yen. Pound yen is actually moving sideways for the last year and a half or so, and actually no, sorry, for the last 6 months. So actually why I put this chart on and why I wanted to show in this video is because if my count is correct here, then we are in the final stages of this sideways price action. If you're familiar with an Elliott wave principle, then you know the triangles are made by 5 waves in a sideways price action labeled by A, B, C, D, E letters. So A, B, C, D, and wave E. We have seen a nice move down in the last few weeks, but not beneath wave C swing low. So actually this counter remains valid, and why I bring it on is because we can also see that prices are now trying to break above this channel resistance line. So ideally we'll see a continuation higher in impulsive fashion. However, as a traders, I always want to focus on minimum expectations before I put any trade on. So watch out for this 4-hour development. From minimum perspective, we expect prices to bounce in at least 3 waves. Let's assume that market is going much lower, but you still would expect a 3-wave bounce. Okay, so I'm looking for 3 waves of a rally here back towards 143. So as long as the market is trading above these recent lows established last week, I'm bullish on pound yen. Also, cable, after a very strong decline over the last few weeks, has turned bullish, and I'm expecting also, as you know, if you look at the Elliott wavecounts page, I'm expecting also on cable a 3-wave rally. So it looks like the pound could get stronger this week. Also, what is really interesting here on a weekly chart is that prices is at this 50-period moving average. Not only that, we have seen a nice doji here at the lows. So ideally we will see this week price is trading higher. Okay, so that's for pound yen, expecting more upside at least for the next 3 days. Now let's take a look on the S&P 500. Stocks made a very deep and quite unexpected strong decline for some since market found the top at the start of this month. So actually what we have labeled here is just a strong free wave decline. So what really matters is that you still should be aware of a bigger trend, and this trend is clearly bullish for the last 7 years or so, if not more. So stay with this trend and focus on and expect more upside if you can say or label any declines in free waves. Okay, and what really matters is at this stage is that not the decline was made by free waves. So here when prices was trading around 23.17, it was still too soon to say that this is a correction. But what really caught my eye is that reaction from that very important levels, trendline support and C to A equality level, from reaction from there was impulsive. Okay, so very strong move in a short period of time, and this is actually why I think that this was a correction. Okay, and that we are back in a bullish mode. So I would be expecting more upside, especially after this correction here. You can see that sharp reaction followed, then we have seen a slowdown, which I think is just a pause with an ongoing uptrend. So I think that next very strong leg can be to the upside, and from minimum perspective I would look for 2470 retest. It was actually way B swing high. So what is really interesting in connection with pound yen, if you see risk on mode, if you see stocks turning bullish, expecting a breakout on stocks, then pound yen should move even higher because Japanese yen should weaken, okay, across the board. So watch out for this breakout. Also this trendline resistance here should matter and should give us more evidences of further price action if we will see a daily close above this level. Okay, S&P 500, actually what I'm looking at is another and final piece of the puzzle to complete this wave 5 of a larger extended black wave 3. Okay, so stocks for now still stay bullish, but if we will see a drop beneath 24.17, which should be in validation level for current count, then obviously I would say that this blue wave 3 finished here, black wave 3 finished here, and then I would most likely look for much deeper correction before we may continue higher. Okay, but as things stands right now, expecting more upside as long as we are trading above August 21st lows. And also final market of today will be Bitcoin. So on this one, actually it's a weekly chart. We are bullish here. We see a bullish pattern in progress in 5 waves, so there is room for much higher prices here on Bitcoin. But we see prices in late stages of red wave 503, so watch out and be aware of a reversal lower. Now in September normally volumes will come back, so when market conditions will settle a little bit, we may see this reversal down for wave 4, and normally this will be just a pullback within the uptrend. Okay, so for now we are tracking, as I said, final stages of a red wave 5. There is room for 261.8% extension, but psychological level is a little bit higher at $5,000 per one Bitcoin. Okay, what is really interesting for the short-term charts is that market accomplished a free wave decline here for wave 4. We have been tracking this one very closely. It played out perfectly. We labeled an ABC, so it's actually an irregular correction because wave B, as you can see, moved to a new extreme. So a lot of traders, I guess, were caught on the wrong side here. They were playing a breakouts here and market turned to the downside. A lot of them probably had stops also who were long, of course, below these wave A levels. Also, those were stopped out. So those this spike formation was actually ideal for this resumption higher. And what really matters is that this leg up appears to be impulsive, which means it's part of an uptrend, so expecting more upside after this short-term consolidation that can actually be finished. So I think that in the next 24 hours we could see a break to new highs here, and this Bitcoin should stay bullish as long as we are above this wave 4, of course. But once we reach a new high, this invalidation level should immediately move to be moved to higher levels. Okay, so just keep in mind that once we get to new highs, that will be a fifth wave of a larger degree, wave 5, and that's when we should pay attention to reversal signs. Okay, and if you see a 5-wave drop from the high, this should be a very strong indication that new, most likely deeper correction is underway. Okay, traders, thank you very much for your attention, and I will catch you with more updates in our new chat room on Slack, so check this out, and also of course on our intraday page. Bye.